following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen.
Keep up good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Expect to have hope rekindled. Expect your prayers to be answered in wondrous ways. Market-wise, let's take a look at it out here. We have the Dow Industrials down 233, NASDAQ down 103, S&P's down 24, gold contract up $7.30 at $11.27. Silver flat at $14.54. Platinum up $7 at $8.81 an ounce. Copper up a penny at $2.05 a pound. Light sweet crude up 63 cents, $32.08 a barrel. Bonds 10-year flat. 30-year down 11 ticks, 159.26. King dollar down 198 ticks at 98.93. The euro at up 38 at 109, and the yen is trading at 118.61. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Volatility in spades, no doubt. That's going to continue. We had the Fed announcement, 2 o'clock. Bottom line, dovish statements out there in the Fed. Didn't matter in the market. Market's not digging it. Gold market's digging it big time. Gold goes topside, has the juice, has the volume, all of the above. Now, let's go take a look at the S&Ps first. So you have the S&P, SPY. SPY got to a price point today of 191. We've done 132 million shares, and what you're actually going to have here is that you're going to have a higher high than the last 3 days, and you are going to have higher volume. So volatility, just hold on, because we're going to be right back up here. This is just about as wild as you can get coming off this low. That's on your SPY. We look at the NDX 100, the 3 Qs, same type of setup inside the NDX 100. Well, actually, no, the NDX, now here's divergence. So the SPY got to a higher high, gave it up on price, you're going to have higher volume. Now the NDX, the 3 Qs are down 246. That is into the high of the low. Now that's 100.83. Now, we're at 100.73. If we reject and close over 100.83, that's going to be rejection of the high of the low with lighter volume. And I expect you're going to do that. And then what you get, and this is what's really cool, if in fact it sets up that way. That's very hard to do, number one, because on one of the indices, what you're doing is that you're going down, you're hitting the top of a high volume bar. On the other side of the indice, that's your Q. On the other side, the SPY actually got to a higher high, had higher volume, and gave it up. I find when you have that, and that's in harmony in a big way, that market, correlation-wise, would be that it was going to go back up again, which is just wild. Gold contract. What do we have with gold? Fed comes out with the numbers. Gold likes it. Gold was trading sideways to, slightly lower out here this morning. You're at 1127. You've done 148,000 contracts. This baby was going to be up to 1137 at about a heartbeat. It's making its way up to the 1192 area, folks. The 1192 was last swing high up here on October 15th. Bonds. We go take a look at the bond market. It looks to me that bonds have topped out. You had a failure on price yesterday, you had a failure in volume, and now what you're going to have out here, you're going to have a nice little hanging man on top of that. So the 10-year right now, we're at 128.25. I'd actually like to see it close under 128.23. 128.23 was the high of last Thursday. Friday was 128.22. A close underneath that level there would be a better indication that bonds want lower price. We go over to the silver market. We take a look at silver. We have with silver. Silver hasn't had much movement out here today. Silver is building cause to get up and over the 1464 area. Now, we hit 1485 today. And the volume's not bad either, 35,000 contracts. You're going into 43,000. So it looks to me that, we're going to make that run, and we'll see whether silver can get over this area, and it has the volume with the price move as it gets into and test that whole area. King dollar, what do you have with King dollar? King dollar just can't handle higher price. King dollar out here, you're down 183 ticks. Not that that's a lot. It's not. What it has done, though, it's got back inside the 99.34 area inside King dollar. So what that sets up, first off, it sets up a run down to 97. I suspect we're going to run into this 97.22 area. That was the low that was generated out here on December 15th. You get volume down there, and then it'll be wide open to get down to the 94 area. Apple come out with numbers last night. Bottom line, Apple can't handle higher price. You're down $6. It looks like Apple's going to actually take out a B point of a very large ABC structure on the way down. So Apple is going to be a monster drag on the NDX 100, on the Dow Industrials. Inside the Dow out here today, Boeing is getting taken apart. Boeing is down 8.5%, or $11.21. Now, Boeing is also another large ABC structure on the way down. This just took apart a B point, took it apart with volume. And what we are going to have after the close out here today, which is going to keep rocking this market, is Facebook. Facebook right now is trading down 261. You're at 94.72. And the way Facebook is set up, Facebook looks to me like it wants to go test the November 5th area. Now, that's really a high level, folks. That's 107, and we're at 94. So Facebook is going to be wild coming after the close out here today. It's, now that's, my take, that's what it wants to do first. On a longer-term basis, all these equities want to go back to August of 2011. This August of 2011 deal, folks, each and every day, just more equities whacking into it. Boeing is certainly not there yet, but Boeing one way down from 150 to 116. If you pull this back, I believe it's about 78, which was a long way away a few weeks ago. It's 71. 71 on Boeing is the August 2011 level. And what you do have, and Boeing is now on a monthly basis. In the month of August, we went from 146 to 115. You did 92 million. We've already done 112 million. Boeing is blowing away at swing points with volume. That is saying the monsters are getting out. The door is not big enough. Get your stops in, folks, and get the heck out. This is Tom O'Brien. This is TFNN. Dow Industrials are down 276. NASDAQ is down 114. S&Ps are down 30. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's down 267. You get the NASDAQ off 111. S&Ps are down 28. If we go inside the Dow Industrials, we take a look at what's moving it out here. The number one mover on the downside is Boeing. Boeing's down 9% or 11.68. Apple's number 2. That's down 6 1/3, $6.35. Merck is down 2.8%, 147. DuPont is 2.7. Putting juice into it, even though the Dow is getting smoked right now. It's down 270. Verizon is the leader. That's up 51 cents. Johnson & Johnson is up 33 cents. 3M is up 10 cents. And Walmart is up 3 pennies. Inside the NDX 100, what do you have? Leader on the way down, BRCN, BMRN, Biomarlin, that is down 7%, or $6.18. Regeneron is down 6.5%, or $30. JD.com is down 6.5% at $172, and Netflix is off 6.5% at $6.29. Putting juice into it, and we're down 2% in the NDX, down 2%, that is. Biogen is up $14.53. You have CA is up 74 cents. Liberty Financial is up 5 pennies, and that's it inside those 100 stocks. We take a look at some of the higher volume stocks in this market. This is what you have. You have Bank of America is up 5 pennies. Let's see, Facebook's down 286. Boeing's the big one. Microsoft's off $1. You got Williams Company's down $1. If we go over to Amazon, Amazon's going to be out with their numbers tomorrow, folks. Amazon right now is down $21. It's at $5.79. This has, you have the high volume spike from the 20th last week. It's down from a high of 696. So you get the high volume spike from last week, and then of course you get the August 24th high volume low. These markets, these high volume lows, folks, the markets and the equities inside the markets, they're going to get them. They're going after them, and they're going to get them. We go take a look at the oil patch. Let's go to ExxonMobil. What do you have with ExxonMobil? You got to a price point of 77 today, 77.46. You're at 74.86. This is nice. These are good trading vehicles right now, folks, because what you have, you know, now once you get inside 75, 72, which was the high of the last low, that brings your probability higher that you're going to go test the 71.55. Now, the last time we came down there, this is what's pretty cool here. So the last time we came down there, we had volume of 33 million. That 33 million was coming into 34 million, which was generated how we came off the bottom in August. So what you're going to be looking for, if you're bullish this, you're going to be looking for a rejection of price with lighter volume. You're bearish and you think that this is going to be the ABC down right now, and because this will end up, it can test 66 bucks. What you'll be looking for then is that you'll be looking for expansion of volume as you start getting into lower price. You get that expansion of volume, that sets up ABC down. Boeing just got absolutely taken apart out here today. There's just no doubt about it. And what that has to do with, it didn't have to do with their earnings this quarter. It had to do with the earnings in 2016. They said 2016 they felt that the numbers weren't going to come in like they wanted to come in. Inside the currency markets, well, let's go to the bond market. So the Fed comes out. The Fed says, hey, listen, the employment's still going pretty good. The housing market's going good. The ironic part, the Fed's a trip in itself anyway. You know, their quote, folks, is that they're watching the markets. Well, no kidding, they're watching the markets. I mean, we're all watching the markets, okay? The quote is, closely watching developments. Okay. That means nothing. Federal Reserve officials left interest rates unchanged and said they expect to raise borrowing costs at a gradual pace while watching to see how the global economy and markets impact the U.S. outlook. The Federal Reserve Market Committee is closely, here's the quote, is closely monitoring global economic and financial developments and is assessing their implications for the labor market and inflation and for the balance of risk to that outlook, the central bank said in a statement today. The amazing deal about this, folks, goes like this, is that I had heard one of the Fed governors, this is a couple weeks ago, and I had brought it up, and one of the Fed governors had said that he didn't think the volatility in the marketplace would make any difference about the economy. It's like, where's the common sense in that? You know, there is so much money that's invested inside the marketplace with whether it's IRAs, whether it's pension funds, whether it's states. The bottom line, folks, you know, my take is that this market's going to go quite a bit lower. Even without that take, a common sense deal, meaning that if the market takes a 15% hit, people are going to feel broke. They're not going to feel broke. They're definitely going to, that's a lot of money lost, okay? It makes a difference. It makes a difference each and every time. I remember the first 87 crash, the 87 crash didn't affect, and picture this, now check this out, because this is pretty cool. The 87 crash, crashed in 87, the market came right back, but guess what? 9 months later, the United States economy was getting jacked up. The reason being is that there was confidence that was lost, and the market had already come all the way back. It makes a difference when the amount of money gets lost that quick. Let's go to Natasha in Nevada. Hey, Natasha, what's going on?
Hello. I'd like to know what your price projection for the Nugget, the NUGT,
NUG.
is going to be for the next couple days.
Let's take a look at it. So we have the NUGT. Now, the Nugget, folks, is the 300% bull position of the New York Arca Index, which is the HUI. So now, do you own this right now? Or are you looking to buy it? Natasha?
Yeah?
Do you own this or are you looking to buy it?
No, we're already in. We got in at
Good for you. Okay.
21.
Good for you. So my take is that this thing's going to run to 31.70. You know, you got action right now. Remember that these are daily investment vehicles, you know, but I think what happens with these folks, they compound on the way up and they get defensive on the way down. And once you start compounding, we're going to be compounding $25.79 today. That goes very fast, you know. So, Yeah, at 3150 is game, and all the equities, they're acting the same way. So you got some action here.
Excellent. Thank you.
How long have you been listening to TFNN?
Oh, geez. How many years now, Chad? How many years have we been listening? About what?
3.
3?
That's a beautiful
Okay,
thing.
3.
Well, thanks for calling, man. Welcome to the Tiger family.
All right. You take care.
Okay, have a great one. Have a safe one. You gotta love it. That's husband, wife, boyfriend, girlfriend, something trading gold together. Thank God it's going up. You stay right there, folks. We'll come right back. Dow Industrials down 235. NASDAQ off 98. S&P's down 23. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 245. The Nasdaq's off 101. S&Ps are down 24. And we're lucky enough, and we hit the lottery quite a bit around here, particularly when the Fed's coming out. We have our man, Mr. Chris Gaffney. Chris is the president of Everbank World Markets. And folks, if you want to learn more about Everbank, just come over to our website at TFNN. You'll see the banner on the right-hand side. You can hit that banner. You'll bring up the Everbank website. And Chris and I are going to be talking about not only the markets, we're going to talk about what kind of type of services Everbank can provide you. Chris Gaffney, welcome back to TFNN.
Well, thanks. I appreciate the kind words.
Well, I'll tell you, it's so cool having someone like you not only coming on, but you get a large bank, you deal with a lot of currencies, you deal with derivatives, and of course, the Fed comes out with an announcement today, and they really didn't say that much. What do you think about what they have to say, Chris?
Well, I thought it was mildly dovish when it came out,
yes.
and mainly because they added back that language about monitoring global economic and financial events, and they also took away some language that said the risks are balanced right now. So
yes.
To me, that shows that they're a little worried, and rightfully so. I think with the data that's been coming out of the U.S., the economic data here doesn't show that the economy is really in as good a shape as they would think, especially to raise interest rates. And so I thought that the Fed was dovish in their statement, but now we've turned around here, and I think the whole market did. I mean, gold was up on it, and so everybody thought, well, maybe they've taken that March rate increase off the books, but now we're turning negative on the equities again, or turned pretty sharply negative on the equities,
sure.
And so that's a little confusing, but gold's still holding up. And
gold has caught a good bid, and so hasn't platinum. Platinum was getting killed, and they both caught a pretty good bid. I'd like to see silver get over this 1460, but there's no doubt that they caught a bid. You know what the amazing? I mean, it's got to be so hard, their position anyway, because the economy was a mess, right? Everything went down. And it's amazing though when we looked around the rest of the world, and those rates are so low, and our rates still are kind of high.
Well, that's what's going to continue to support the dollar.
Yes.
I mean, that is exactly what's driving people to buy dollars, and will continue to drive people to buy dollars. I think until we see the Bank of Japan or the European Central Bank start to talk about raising rates, and the U.S. is the only ones that are even considering a rate increase at this point. So, in our economy consumers sure think our economy is doing well, and I guess that's maybe a result of the low gas prices. Consumer confidence is really strong. So.
Tommy and I, my son Tom and I, we do a program in the morning, and we've been talking quite a bit about your currency accounts, and the main reason is that because the rand dollar and some of these equities, mining equities in South Africa have just gone to the moon. And we know what we were thinking, Chris, right? Now, this gets pretty cool, folks, okay? At first, we were saying, this would be pretty cool because we're thinking, okay, if we had a Tiger trip and go to South Africa, right? The rand dollar is $16.50 to $1 US, folks, okay? And I says, oh my God, hold it. Even if you just buy 10,000 US, right? You get 160,000 rand dollars. And it's almost, you're a winner both ways. If you go to the safari, that's going to be great, right? But then if you don't go to safari and the dollar, pulls back at all, well, great. You're going to make more US dollars.
You book gains, and that's, I think, the key. And even though this difference in interest rate policies by our central banks may keep the dollar fairly strong here in the short term, most, and if not, a majority of people believe that we're nearing the top, and some actually think we are at the top of the dollar, and that we're not going to see too much more strength from the dollar here in the medium to longer term, and therefore, there are opportunities, I think, in investing into foreign currencies, select foreign currencies that will improve. And on your first point, the world is on, vacation to the world is on at a discount right now because of this strong dollar. So
it is.
If you're planning on traveling, outside the States is cheap right now.
And what happens, folks, is that, when you hit the banner and you come over to EverBank, they have foreign currency accounts. And what's so cool here, and I know Tommy kept saying to me, well, what if it doesn't go down? I says, this is the best of both worlds. If you think you're going to go take a trip, whether to South Africa or Europe or Mexico or South America, well, guess what? You could open the account at EverBank, change the dollars into that, right, into that currency, right? And then guess what? If something happens that you don't go, it seems like, well, to me, it seems like those, the
currencies are cheap right now.
Exactly. So it's like,
Brazil's
oh my
another
God.
example.
If
Brazil's got the Olympics coming up, so there's a great opportunity to go down, book travel there if you're looking at it. And boy, you talk about a good rate to carry. Brazil's cheap right now. I know their economy is kind of a mess, but that's an opportunity too.
It is, and we haven't seen this opportunity, folks. When I was a kid, this opportunity was kind of all over the place. You'd go somewhere, and King Dollar was like amazing. Because what's wild, Chris, is that when you look at the dollar index is really not that high in correlation of some of these currencies that we're talking about. Some of these other currencies have got killed compared to the dollar.
Yeah. No, and you're right there, and we're around, and this is an important spot for the dollar. It looks like after dropping substantially in the past few years, the currencies are starting, especially the euro, is starting to stabilize in here, and we're seeing signs on a technical side. I'm not a huge technical trader, but even the technicals on the dollar index are looking like the dollar is starting to settle in here a little bit, and could be at an inflection point, depending on if we jump above the 100 mark again. But right now it looks like it could be at a turning point.
And if we could just talk a minute or so about the yield pledge checking account that you have, because this money market account, folks, is huge. If you want to be out of the market and just be in cash, EverBank has this yield pledge checking account.
Yeah, our account opening people have been incredibly busy, because I know we were among the top on yields for our CD products, and we continue to be among the top on our checking accounts. And yeah, we have a pledge to keep the interest rate on that checking account among the top 5% of our competitors. So it's a case where you get a great rate up front.
Yes.
We have what we call a bonus rate for the first 6 months that you have the money here. And then even after that, though, we are going to stay among the best paying checking accounts. And it's a full service checking account. It's some great online capabilities, and a totally liquid account.
You have to love it. Come over to our website at TFNN, folks. You're going to hit the EverBank banner. You're going to see it go right under banking. Chris, you have a great day, safe day. We really appreciate the education and the update.
You bet. You have a great day.
Have a great one. You stay right there, folks. We'll come right back. Dow's down 226. NASDAQ's off 100. S&P's are down 23. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And folks, if you'd like to call Everbank, it might be a lot easier for just to call them. Their phone number is 855-750-4051. Or you can log on to everbank.com/TFNN. You definitely want to get over there, look at that website. The currency accounts are phenomenal. The regular high yield checking account, if we all have money market accounts somewhere. It's a great place to have a money market account. So check it out, 855-750-4051. I'll log on to everbank.com/TFNN. We come back to these markets out here. So we are right now, Dow's down 231, Nasdaq's off 103, S&Ps are down 23. After the close out here, Facebook's going to be the big one after the close. Now, the Facebook is down 283. You're at 94.58. And, we'll see where this shakes, rattles, and rolls. But what Facebook does have is this. It has a high-volume spike at November 5th that hasn't been tested. So that thing can get tested in about a heartbeat. That's a short-term deal, but we're talking short-term because we're talking they're going to be coming out with the numbers right after the market close at 4 o'clock. Tomorrow is going to be Amazon. Amazon's coming out with their numbers tomorrow. Amazon's down $19.65 right now. It's trading at $5.81. And Amazon looks to me, now this is where the difference is. Let me just look at this. Yeah. See, Amazon come off its highs with volume. Amazon's got a problem. Amazon, number one, could be a monster ABC down from the highs, which would be a 657. Oh, man, it's a $110 ABC down. That would get you 508, 498. And 498, yeah, there she is, man. So check this out. The ABC structure down. And what happens with Amazon, folks, I'm not taking the high because when you do an ABC structure on the way down and the way up, when you have a gap is the same as a swing point. So that what I'm doing on the A point there is the high of the gap down, which is January 4th. But that setup there gets you right into the 489, which is the high of the low of August 24th. NFLX. Let's go take a look at Netflix out here. You get Netflix is down 660, trading at 91.25. That's also coming into this is down from 133. It's going after they're going after the high volume low also. They're all going after these high volume lows. The real question is going to be, do they hold on price as they come into the high volume low, or do they just blow that high volume low away? We'll see how that shakes out. The XAU, the HUI, we take a look at the XAU. You get action. We're up $1.13. You're at 45.57. This is on its way up to the 49.96 area. The HUI. Now, remember something. That has juice, and that was the weakest indice inside the gold and silver market. The gold bugs index, this really got action. Gold bugs index, and in fact, if When we talked to Natasha out in Las Vegas, I think maybe it was Boris and Natasha. I'm only kidding. It's going to be pretty good, though. Anyway, we were talking to them about Nugget, right? Well, bottom line, we're at 120.25. This baby, I love how it's coming into these swing points. So the swing point we're talking about is 121.51. This is on the Gold Bugs Index. You take that out, and guess what? You're going to be at the 139.55, and you're going to be there pretty quickly. Coming February 2nd, you know, Chris and I were just talking about foreign currencies. Well, coming February 2nd, folks, I'm going to be doing a workshop from 6 to 7 o'clock at night. What that workshop is about is foreign currency impacts on gold pricing. If you want to go to that workshop, come over to our website at TFNN. If you're a gold subscriber, Gold Report subscriber, you'll be at the website, at the webinar. You can test drive the Gold Report for 30 days absolutely free. You test drive it, you come to the workshop. Now, right under breaking news, folks, I wrote a white paper. Check out the white paper, read it. The leverage, it's called rearing, actually, inside the mining business, when your currency is going with you versus against you. And it's pretty amazing the amount of money, number one, that can be made in the business on a day-to-day basis. It's more amazing about how either equipment can get paid off or debt can get paid off when the currency that you're doing business in versus the currency that you're getting paid in. And the gold market's very unique because everyone gets paid in U.S. dollars. That's how gold works. All the currency, all the big mining businesses, they have a gold bank. J.P. Morgan is most of almost everyone's bank. The way that works, so picture we all own a gold mine for a second. This is how it works. We own a gold mine. We're mining each and every day. You take the 30 days, and each and every day they're delivering gold, okay? You take 30 days, and they take a 30-day average. That's how this works, you know, of the gold price. That's how they get paid. They get paid about 90 days later on that, but that's how the gold price works. In the context of the South African miners, what you have is that, like Harmony has 27,465 employees. All their expenses are in Rand dollars. All their income is in U.S. dollars. It doesn't get any better. And particularly doesn't get any better because you have two separate issues. The first issue, labor cost is number one. Well, guess what number two cost is? Energy. You can see both of them are going with the South African companies in an extraordinary way. The energy cost structure is going with all the mining entities across the world because the energy cost structure has come down dramatically. There's no two ways about that. We go take a look at the financials. Financials, folks, have a problem. This XLF looks like it's doing an ABC down. You know, so there's something inside these banks right now. They either got to come up with more money, you know, and their books aren't as clean as, you know, they claim they are. Something's going on, you know, because J.P. Morgan is doing an ABC down, too. It's already come down from a price point of 69. You're at 56. You went up lighter volume. This is a classic ABC down. It's a big one. And it looks like it's not only going to go after $50, you know, $50 is the high volume low from the 24th of August. But it's going to go after it. I mean, that's the way that's set up right now. So we'll see if it can hold that price or if, in fact, just go right after it. Yeah, and as we brought up yesterday, one of our targets in the den is bringing up a great point. Banks are buying each other. And what has happened when I brought up the largest buyers of banks yesterday, I brought up 5 or 6 different banks with the last 13F filings. What you did have is that banks were buying banks, and that is absolutely amazing. What's amazing about that is that they're all going down, but you can make the case that the banks are trying to prop up the banks, and guess what? They're not doing it, as one of our targets also said in the den yesterday when I was bringing this up. The banks are buying the banks, but guess what? The funds are selling the banks. So the funds are much bigger than the banks, because what has happened, folks, is that the index funds, the mutual funds, the ETFs, they're all much bigger than everyone right now. They can move markets, and they can move them very quickly. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow down 214, NASDAQ off 97, S&P's down 20. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 234. NASDAQ's up 103. S&P's are down 22. If we go over to Apple for a second and take a look at Apple, what you're going to see is that you're down 659. You have volume behind the move. It looks like it's going to be an ABC structure on the way down, and it's a big one, folks. 109's your A, 93 is your B, so you got $16, which would get you down to $85. You're at 93.41 right now. And it's interesting listening to analysts talk about Apple. It's driving the analyst community right up a wall, meaning that you have a company, no doubt, that takes in huge amounts of money, has huge amounts of cash, but guess what, folks? Public companies have to grow. If they don't grow, you go down. It's that cut and dried. They talk about Apple trading at 93 and has $27 worth of cash. Well, guess what? That's not a good thing, because what ends up happening is that the cash is going to be gone, whether they go buy someone, whether they use it, all of the above. So bottom line, Apple has to come up with the new products because the whole world owns Apple, has Apple, all of the above. And that heyday, like anything else, went on a huge amount of time, but it's over. When Amazon comes, well, when Facebook comes out, so for this, Facebook's going to be fun tonight. Facebook's down 277. I can see Facebook belting out some numbers here and, getting a pop. And, we'll see. We're going to know in 5 minutes, 10 minutes, right? 5 minutes. Beautiful. So that level there, that's going to be the yin. Now the yang on this, meaning, so Facebook should put some juice into the NDX 100, because you got to remember something. The NDX 100 is open a quarter past, and so isn't the S&Ps. That would be the positive. Tomorrow night, Amazon, I think, is going to be a big problem. The way Amazon's trading today, it looks like it's going to be an ABC down. And there's not like a lot out here that, I don't have any high volume spikes up above. So Amazon could be quite a problem for the NDX 100, in general. That's the way it seems to be setting up. We got to take a look at the small caps, what you have with the small caps. The small caps have been the weakest indice. Now, the way the small caps have set up out here, the small caps want to go higher. So when I wrap that baby up, that would be saying that even with our markets down, again, another 200 and, let's see where we're at, 230 points, this structure, meaning the market trying to do an ABC structure on the way up, the B to C is still in place. And it's going to be volatile. This volatility, folks, it's, if you're a trader, it's wide ranges. You can trade both sides of this market very, nothing's easy, but you can trade it pretty easy because the markets, the ranges are so wide. I expect you're going to see this volatility, though, last for about a year and a half. This is just the start of the volatility. And if you want to see something that is an absolute mind blower, what it is that the VIX, even with the market down again, well, guess what? People are still not scared. This VIX traded today to 2250, down to 2042, and it's at 2350. That's not a market that has huge fear in it just yet. So I suspect as we move through the winter, go into the spring, when you look at it on a longer-term basis, picture we're January 27th, now start picturing going all the way out to October, because that's where this thing is going to shake out. That this thing is set up really nice, that you can have a couple nice bounces, you can come back down, and they do a nice leg down in October. That's kind of how this is set up right now. You stay right there, folks. We'll be coming right back. Dow down 230, Nasdaq off $1.03, S&P's down 21. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. The Facebook numbers aren't even out yet, but someone's a believer because Facebook has just gone from 94 to 99. The NQs just went from 4120 to 4127, and the number's still out. So I suspect someone has this number early. Wild. It's going to be coming out, though, any minute here. But the way Facebook is trading right now, folks, someone's got this number. I mean, the monster, the volume's huge, all of the above. It's just wild. It is better to believe than disbelieve. And in doing so, you bring everything to the realm of possibility. Market-wise, let's take a look at it out here. Dow Industrial's up 222, NASDAQ up 99, S&P's up 19, gold contract up, let's see, where is she? She's up $5.30, trading at 11.25. Now, gold had taken the swing point out yesterday, had great volume, didn't have high volume of the swing point, had volume, had the price spread, got the price spread going again today. Gold is at the 11.25. That's on its way to 11.50 to 11.92. It looks like on a basis, 2-3 weeks, the swing point from October 5th, that wants to get hit. That's the 11.92 area. Silver's at $14.49. Silver still has to take out the 14.68. I expect you're going to see that the next few days. We moved up into it. We're right below it right now. We'll see what kind of strength it has once it goes into it. Oil up 50 cents, trading at 31.95. Oil is in a nice range. The range in oil is about 29.50 down below, 32.50 up above. You get a good trading range, both sides of it. Bonds, 10-year up 2 ticks, 128.28. 30-year down 6, 159.31. Now, the 10 and the 30, folks, they both failed yesterday on price and volume going into the January 20th highs. I expect we're going to back off from here. As we back off, we'll see whether the volume expands. If the volume doesn't expand, that could just be a regular correction. If volume expands, it'll be a higher probability that bonds have topped. You got to remember that the bull market in bonds started in 1981. Pretty amazing. Ronald Reagan was president January 3rd, 1981. Bonds were trading 14%. Guess what? We went from 14% down to 2%. Odd 1% in the context of 2-year notes. Pretty amazing. King dollar. King dollar down 128 ticks, 99 flat out. King dollar wants to move into lower price. We'll see how it handles the lower swing point. The lowest swing point is laying out there at 97.05. Euro is up 26 at 108, and the yen is trading at 118.63. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. I got to show you the world of Facebook, because this is really unusual. Someone has placed a very large bet on Facebook. Now, when you get something like this, this is a closing price. I have a 10-minute bar on this. Facebook has gone from 94.25 up to 99.59. That's a monster, folks, okay? And we did that, by the way, on, look at this trade. Oh, my God, this is huge. I want to see if this is one trade, actually. So you get some monster trades out of AQR. 1 second. 99. Well, up at the 99, this is the type of money we're talking. The buyer is up at $99 right now, buying 40,000, 39,000, 39,000, 42,000 shares at a pop. So it's a big number. And these numbers were done. I have it in front of me here. Let me put it over here so you can see it. This is at 1607. So it's 407. You know, and as I just said, Facebook's not out yet. You know, Facebook itself, if we take a look at this, Facebook has a high volume spike, folks, at the, let me get this level for you, because I suspect that's right where this thing's going to go. Facebook has a high volume spike at, the bottom of that is 107.95. That was from November 5th. The top of that is 110.65. That bottom line can get hit and get hit as soon as they come out with these numbers. You know, many times what ends up happening is that, like Google comes out with their number 1 second after the close. Apple tells you they're going to come out at 4:30. Facebook hasn't said when they come out. They're just saying they're coming. Oh, no, here we go. 1 second. This is going to be wild. So I don't have this yet, but they're claiming, you know what's going to go on here? They're claiming that they came out. Oh, there it is. Okay, no. Sorry about this, folks. Okay, here it is. It just did come out. 1607. Okay, so here's the Facebook numbers. Let's see what we got here. Okay, the estimate was 68 cents. They did 79. That's the bottom line estimate. Top line estimate, look at this. This is pretty amazing, actually. So the estimate for top line was $5.37 billion. They come up with $5.84 billion. Well, they blew away that number, man. They're blowing away some numbers. Average monthly users are up 14%. Mobile active users are up 25%. Right now, on mobile active users in the fourth quarter, they had 1.59 billion. That's pretty intense. No doubt. So Facebook delivered another quarter record revenues that topped estimates as it sells more ads via videos, mobile devices, and Instagram photo sharing services. Fourth quarter sales rose to $5.84 billion compared to $5.37 billion, which was the analyst estimates. So they took in $500 million more. That's an additional 10%. So they're growing 10% more than the analysts think they're growing, and of course, analysts are always bullish. Marketers are flocking to Facebook for its knack of getting well-targeted ads in front of consumers. The same technology is now being deployed across the company's properties, especially Instagram, which has marked its first full quarter of ad sales across international markets. Big numbers, folks. That's the bottom line. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished down 222. NASDAQ on 99. S&Ps are off 21. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And some percentages out here on some of these equities. You had Amazon was down almost 3%, or $17.90. Google was down 2.5%, $16.21. Let's see. Intuitive Surgical was down 2%, or $11.22. Illumina was down 6%, $10.48. You had the Baidu down 5.5% at $8.81. LinkedIn was down 4 at $8.11. Tupperware evidently went up buying Tupperware. That was down 14.5%, or $7.51. We go over to the Federal Reserve. So the Fed came out today with this statement. If you're listening to Chris Gaffney at 3:30, my guest, Chris is the president of Everbank World Markets. It was a dovish statement, folks, and market-wise, it didn't matter. What it did matter with, of course, in the commodity business. So the Federal Reserve opened the door to a change in their outlook for the economy this year, and possibly slowing the pace of interest rate hikes that would make a move in March less likely, while underscoring their need to wait for more data. So picture this: we're the 27th of January. They're not going up in March, folks, okay? The volatility inside the marketplace, I suspect they're not going to be going up until sometime probably in 2017. We'll see. The Fed is really in a wait-and-see. Let's see. The meeting was a tricky communications challenge for the Federal Reserve Committee. U.S. Central Bank has had to acknowledge dimming expectations of global growth that have resulted in a sharp stock market sell-off, while avoiding a definite directional hint on the timing of the next rate increase. After all, it was only 6 weeks ago that they raised rates for the first time in 10 years. The FOMC said today that they're going to closely monitor global economic and financial developments while assessing, this is a quote, assessing their implications for the labor market and inflation, and for the balance of risk to the outlook, in their statement after a two-day meeting in Washington, D.C. What's really wild here, folks, is think about this for a second. But you want to understand what they're saying inside of this. They're closely monitoring global economic and financial developments. Well, we know the globe is a mess. Let's put it this way. The stock markets in the globe are a mess, and, fundamentally, a lot of these countries are in a mess. Now, the next line in this, though, is the important one. While assessing their implications for the labor market and inflation. Well, the labor market, folks, bottom line, is good. Inflation is low. It's like, okay, those two things there, if you only looked at those, you'd be saying, okay, we could go up in rates. As we go on, let's see what they say. That was a soft pedal back from December when they said that risk were balanced, and some economists said that it makes an internal rate hike at the next FOMC meeting in March less likely. There's no doubt they dialed back the bullishness inside of their statement. When we take a look at, and I think this is one of the biggest, common sense deals that you can kind of take a look at. So if you're in your car, I'm going to explain what we're looking at right now. If you're looking at Tiger TV, the screen that you're looking at, this is America, the United Kingdom, and Asia. And what you're looking at, this is a 10-year bond issued by the government and what the interest rates are. Now, so check this out, because you're going to remember something. We're in a worldwide economy. Well, our 10-year rate is at 1.994. So if you need a mortgage, you're buying a house, go do it. That's the bottom line. Please go do it. Canada. Canada is at 1.2. It's like, okay, Canada's at 1.2. So Brazil is at 6.5. Colombia is at 5.1. Mexico is at 4. United Kingdom is at 1.7. France is at 0.7%. It's like we go up in rates. France is at 0.7%. Italy, who's broke, is at 1.5. Great to go to Italy. Go to the Amalfi Coast for sure. Spain is at 1.6. They almost went broke. They're still broke. Portugal's at 2.9. Sweden has it together. They're at 0.6%. But it's a very small country that has a lot of oil. The Netherlands, that's at 0.5%. Same deal. Switzerland, now Switzerland is at a negative 0.25%. So if you give Switzerland your money, you have to pay them to hold your money. Greece is at 9%, and Japan is at 0.2%. Well, those are the 10-year rates. If I put a 30-year rate up here, you're going to see 30 years not as bad. 30, we're at a 2.7. Canada's at 2. They're still 0.7 underneath us, which is, you know, 7 foot. That's almost 25%. France is at 1.7. Germany's at 1.1. Now watch this. If I put a 5-year rate up here, this will blow your mind. At a 5-year rate, we're at 1.4. Okay, on a 5-year. Canada's at 0.6%. France is in negative rates. So a five-year note, okay, you give someone money for 5 years. If you're in France, you have to pay them to take your money, the government. If you're in Germany, you have to pay them to take your money. If you're in the Netherlands, you have to pay them to take your money. If you're in Switzerland, you have to pay them to take your money. If you're in Japan, you have to pay them to take your money on a 5-year deal. We're at 1.4%. You can see when you look at this on just the basis of where we are in the world, we are at high rates, not low rates. I think the aspect, because they had come down so much, they basically got boxed into a corner, meaning that we got to go up at some point. Well, guess what? You don't. And you know what's so intriguing is that when I look at those rates, I can kind of understand it in that aspect. It's still very hard to get my head twisted around the point that, yeah, rates can still go lower. That's really a hard concept to get when, in fact, we are at very low rates. It's not a hard concept, though, when you look at the aspect that where we were 15, 20 years ago versus where we are now versus getting your cash back, because here's the kicker. This market is highly volatile. People are going to be making choices saying, I want to just make sure I get my capital back and I get a small interest on it versus putting money in the marketplace, and guess what? All of a sudden you have $100, all of a sudden you have $60. You know, that is going to basically keep rates low, and I suspect we're going to be in this environment for a long period of time. You know, what will get intriguing is this, is that, let's go over to the oil market for a second, because food, my take is food is expensive. Good food is expensive. We go over to the oil market, and what you're going to see is that the oil price is going to start kicking into the CPI, and that's going to start kicking in, that January? So February and March, we were at $42. We're at $32. So if oil goes up $10, then what you'd have is that there's no such thing as the CPI would not be going down because of oil. Because you check this out. From last year to this year, you know, you're talking about, well, 2 years ago, you're talking about $107 oil down to $32. That is deflation. Now you only have to go up $10, and guess what? That number is going to start getting kicked in as a positive, so you have the CPI going higher. You stay right there. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 222, Nasdaq off 99, S&P's down 19, and as we do each and every Wednesday at half past the second hour, we have our man, Mr. John Logan. Now, folks, every trading day kicks us off 8 o'clock in the morning, 8 to 9. I'm Mr. John Logan. Does an outstanding show right here at TFNN. You can get him anywhere in the world, right on your cell phone. TFNN.m.com. Just go to TFNN.com, hit Tiger TV, folks. You're going to love Tiger TV. You get the audio, you get the video. Now, as you're coming over to our website at TFNN, as John kicks us off, he has an amazing scanner. It's Taz Profile Scanner Plus. Come over to our website. You can test drive this 2 weeks absolutely free. And as you're over here test driving it, you're going to see there's a lot of instructional videos that John has put on here. It's an amazing software tool. He talks about it every morning. Bottom line, he travels the world, period, but he travels the world as the rest of us do on our computers and getting you ready at 8 o'clock in the morning to see not only what the world has done, but what we think our markets are going to be doing. John Logan, what's going on?
Hey, Tom. Man, good to be back with you here.
You too, man. And, you know, you talk about volatility, man. It's in spades, and it's in indices, it's in commodities, it's in currencies, it's everywhere.
God, you know it. You know what was really cool today? You know, I'm a big fan of a relative strength, relative weakness trading game,
yes.
Or trading systems.
Yes.
That way. We were looking at the the situation on the indices, I was actually monitoring all day. I was like, this morning, let's try to, buy these 1880 inflection points on the S&P futures. That worked out quite well for a while. Got to that, unfair high on our 240s. The breadth was kind of positive. The daily was starting, our daily breadth started turning positive.
That's right.
And one of the things that, let me shut this off here. Sorry about that. One of the things that happened towards the end of the day is, there's right around 2 o'clock. Go figure. Some of the breadth calculations really started rolling negative, but what we always want to do is try to find sectors or stocks that are strong to buy in a strong market, and weak stocks to sell in a weak market. And,
yes.
And one of the things I was looking at on our scanner, I was like, what? In this carnage downturn, these utilities are just insane strong.
Right.
And
right.
They were the ones to buy, some of the ramp ups that we got early, and then as the market came off, and then we're kind of tooling around here. These utilities have just been insane, and the scanner was just the breadth on the utilities stayed positive right across the board, as it was this morning. The strongest sector, the strongest ETFs. So I'm showing the scanner right now.
I'm watching it. Yep.
A lot of the green you see on the board right here is just literally. You always try to find what's going to be the least painful trade if we're wrong.
Sure.
This is just, it's been great on the upside, and actually, had made some really good stances when the market was pulling back today.
And would you also have, now, folks, this is, we have a trading room, and it's the Tiger's Den. If you haven't test drove it, come test drive it, okay? Because I suspect most of us are using this scanner, inside there, so we know what the numbers are. And we know there's plenty of people on Tiger TV that are using it, too. And what also happened out here, which is really cool, John, is that, so, of course, we know what the numbers are on the 60 and the 240, right? Mm-hmm. And so what happens, folks, is that on the way down today, once you break 11 million, you go into the next level. And that was so cool, man, because Jay had them all lined up in the den. We knew what every number was. You know what I mean? And it was awesome, man, because what happens, folks, is that these are the type of markets that, when you drop out of one zone, man, you're going to go to the next zone. And these zones are pretty intense here, All
right. Well, here's a chart for people in the car. You really can't see this, but here's that kind of shelf we were talking about, that fence to lean against this morning around 1880.
Right.
And we talked. Okay, there's a 1904. There's one higher. I actually thought we were going to get ultimately up to 1918 before we started sinking. But again, that was, you talk about levels. That was the big level to kind of use as a target at bare minimum. And then when the 2 o'clock thing came around and the comments came out, and you looked at the breadth on our short term on the scanner, and what that is the internals of the S&P 500. I'm going to show this really quick, and what that kind of summation is. Around that time frame, we started looking a little weak going into it. Some things started turning over, and especially around that index inflection point. And then it was just, I'm not a super big fan of going short right now. We're going to be in a little bit of a range here. And it's going to be great trading opportunities, but that was kind of all she wrote, was the getting into those inflection points, and then you have to kind of reassess things now, as far as kind of a short-term trading situation.
It's going to be. I didn't mean to interrupt. But it's going to be intriguing. Right. Now, picture this, folks. Okay, this is what's so cool. John has these indices across the world on here. I'm looking at that Shanghai, John, right? And it looks to me, at this point, we're close to a big bottom. And it's going to be so cool, man, because I can't wait to bring some of these up. And the reason I'm saying this, folks, is this. What had happened is that, this is a straight line move down. It was a disaster, all of the above. No two ways about that.
Yeah.
But let me tell you something. Watch what it's doing. The mind blower here is that this has come back into where it broke out from in 2006. No, in 2006 and 2014. And the volume is dramatically lighter. So watch this on a monthly basis, folks, okay? So I would love to see this get to 2401. That would be awesome. We're at 2735, okay? So when we came down, the first leg down had 872 billion shares. This leg here has 364 billion, and you're going against 569 billion, which I suspect you won't get there next month. You know what I'm saying?
Yeah.
So it's coming into where it started from with dramatically lighter volume. The whole world figures that, you're going to go to zero. And, anyway, I can't wait to see what starts popping up in the scanners. You know what I mean? Because it'll pop up,
Well, I'm showing a chart right now. If you'll notice, we had the bar starting to turn green here on a chart. This is basically trading above profiles here, above balance areas back in July 2014. If you see that,
yeah,
that was kind of the breakout point. But I want to show you something even more interesting, really. When you go into the Shanghai internal breadth changes relative to profiles, do you see that area right there?
I do.
We started going from red across green to green across red.
Yes.
July 2014. Basically, that whole ramp up, it was buy support, and then boom. Just like a penny stock almost, everything kind of rolls over, and then then we're internal negative. We had a little bit of a bounce opportunity. Then Katie barred the door first of the year, and that's like you said, it's not really. I mean, we're in a hole in the marketplace now.
Yeah, we're still at Katie bar the door. No, I can see that. But we know that changes too. Yeah, no.
What you're saying is so true. I mean, but we're kind of in this Wild Wild West thing down here now in the Shanghai. I mean, that this thing could really, really get volatile down here.
Can you just stay here a second?
Yeah.
Because you know what I want to ask you? I'm looking at the left-hand side of your chart there, right?
Uh-huh.
And those profiles on the way up. What are those numbers? Because can we use those here? I want to know if we can use those on the way back. That's awesome, man.
Absolutely. Yep.
John Logan, Tom O'Brien, you stay right there, folks. We'll be coming right back. We're talking markets. We're talking to Shanghai. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Facebook came out with numbers, big numbers. Facebook closed at 94.45. It's trading at 101.28. As one of our targets was just saying in the den, they had scooped up some Qs after the close, and that was pretty cool because Qs closed at 100.58. Now you're at 101.11. We're talking with our man, Mr. John Logan, who kicks us off every trading day, 8 o'clock in the morning. We're talking the TAS market profile. We're talking the Shanghai market right now.
I'm showing Facebook on the scanner right now. How you
look
like
at
this?
that. Oh, look at that. Man. Whoa, baby.
Wow.
That's
yeah.
That's taking out all the profiles, man. That's
kidding.
Yeah. It's a monster, man. Facebook is just a monster. There's no doubt. You know.
That's a high risk trade to short that thing. Oof.
Oh yeah, I wouldn't be shorting Facebook
ever. they had 1 billion unique people access their product in one day.
Exactly. And you know what happens?
Scared, actually.
What happens, folks, is that the reporting on it, okay, is real, and you can get real numbers, and that's a huge deal. You know, when you hear Arbitron, okay, so picture we're in the entertainment business, we're in the news business, right? And what happens is that you'd be really surprised about the amount of advertisers that do not get real numbers because everything is arbitrary, which is just insane. Well, Facebook can show you results. You spend the money, you either get the results or you don't. And that's why I think it's going to work, and it's basically destroying, some stations, but we like it. We like it because we can see the numbers, man. We can see the numbers. We can see the engagement, get the whole ball of wax. So it's pretty amazing, man.
Exactly. Well, going back to the Shanghai, you were talking about some previous numbers. Here's what I'm talking about, this hole in the marketplace down here, because there's really nothing between, let's just say neighborhood of 3,000 and, next leg down is like 2,300.
Which is great, though. That's why I think it wants to go. It should be dynamite.
Yeah, and you know what? You're probably right on that. The original breakout was, I remember, this thing was languishing forever. It wasn't, everybody in China had kind of given up, and this was just a continual short. And then all of a sudden, and I'm going to blow this up a little bit, all of a sudden, back in, if you can see this, back in July 2014, when that breath turned positive, by the way, at the same time, we started breaking above these long-term profiles at 2150. And then it's just been, as you can see, buy support, buy breakouts, buy support, buy breakouts ever since then. But again, just like, these internet stocks like the Yahoos of the world and all that, back, everybody watching the show probably remembers 1999. What comes up comes down a lot when there's so much, feverish outlook on something. And this, they're, what they did in China. They relaxed the margin requirements. Everybody popped into it, missed the train, blah, blah, blah. And then, we could easily come back into that area. Easily.
I wonder, John, what I don't quite understand, folks, is that I remember the run. So picture, they're claiming that the run this time, hurt more retail people. So I'll just give you the numbers on the run. So in July of 2014, the Shanghai was at 2,033. The Shanghai went up to 5,000 in June of 15. So that was 1 year, okay? 1 year we go from 2,000 to 5. And then, now we're a year later and you're down to 2,700. But check this out, folks. When you go back to 2005, 2006, and 2006, the Shanghai took off at 1161, and it went to 6,000, and it was back at 1,600 the next year, and you didn't hear the same amount of yapping. Isn't that wild?
Yeah, it's crazy. Now since then, we've kind of enabled them to understand, you can actually rig your market in very innovative ways from a government standpoint. So it's so weird what might happen here. They could come in. We complain. We're complaining about them buying their own equities. what do we do with treasuries for 7 years?
There's no doubt. And folks, it's so cool when you listen to John in the morning, you get a great perspective of the world, and I've heard you talking about it, and it's the truth. There's no doubt. The bottom line is that, they're all fixed markets. Let's put it this way. Well, this is what happens, folks. This is the wild thing about it. They're not fixed when they go, as far as politicians concerned, nothing goes down. So if they wouldn't care if it kept getting exploding on the way up, what they care about is when it goes down, right? That's kind of,
And that's what really concerns me about getting too short right now, because they could come out with some innovative new thing.
Oh, they will.
Everybody hears, oh, God, it's over, and then we could have a massive spike up, in our markets, which will be great for everybody, I guess. But at some point, as we know, you got to pay the piper, and all these things are, it's not something you can count on from a timing standpoint, but
well,
you know what I'm talking about.
No, totally. And what happens today, folks, is that, over in China, you say the wrong thing and they're going to, basically hang you from your toenails. They got the guy. So today the purge is going on. The guy that's in charge of all the statistics, all of a sudden, he's going to get. He's either locked up, or he's getting locked up, or he's getting investigated. And you're talking about a huge communist dude, man. You know what I mean? And so I'm thinking, is that did he come out with the true numbers and that's no good, or did he come out with numbers that are good, big enough? Do you know what I mean? You don't know. You just know that, hey, guess what, man? They're going to burn someone else.
Yeah. Well, they can point the finger, and that might be positive for everybody there. That, oh God, it wasn't our fault; it was his fault, and who knows?
Yeah.
This is all going to be a drama that's going to unfold, and there's going to be a lot of volatility now. Based on we don't trust their numbers. They're pointing the finger at the guy now, and
yes.
Who knows what the numbers actually are.
Right.
And, it's going to be a little bit of a volatile time here. So guys who are long-term investors, there's some opportunity in taking on some risk in times like this. And some of these guys, I've heard them say, oh, you don't want to do this till there's, you don't want to, you want to buy when there's blood in the streets. What was that, J.P. Morgan?
Yes.
Is that the guy who coined that phrase? But there's really not blood in the streets right now.
It's not even close. And J.P. Morgan had
deep pockets.
He not only had deep pockets, he had one of the best stargazers out there. What it was, he had someone doing the stars, man.
Well,
he did. He did. You think I'm kidding, huh? I'm not.
No, I never think you're kidding.
No, I am not, man.
I fully believe you. I mean, there's
I know. Listen, it sounds bizarre. I know what he's talking about. Larry was telling me. So, check this out, folks. In J.P. Morgan's office, and when you look up, that was all wood, and that was just the whole universe, man, with angles. Is that crazy or what?
It is crazy.
That's man. That must.
But
go ahead.
You got to, as a long-term investor, you talk about this all the time. You just got to, like in times like this, it's never a bad thing if it's too much for you to lighten up.
Sure, right.
And always catch up later. And this thing could go lower. Our market could go lower. We're talking about the Chinese rigging their market and everybody kind of getting happy again. It could get really ugly. And I was listening to you today, and you're talking about the VIX.
Yeah, no one's scared. I know.
Yeah, and you know what? I'm actually not scared, which is really weird because I'm usually scared to death.
Stay right there. And here's the quote. The quote, J.P. Morgan, millionaires don't use astrology, but billionaires do. We're going to listen to Larry tomorrow morning. You stay right there, John. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, as you come over to our website at TFNN, right on the front page, you're going to see in the carousel, new TAS Profile Scanner Plus. You can test drive that right now. That's what John and I have been talking about. Tomorrow morning, 8 o'clock in the morning, TFNN.com. Actually, tomorrow, Tuesdays and Thursdays, folks, we start at 7. Paige and Nico keep you healthy 7 to 8. John comes on at 8 o'clock every trading day. TFNN.com. Hit Tiger TV. Bring up the TAS Profile Scanner Plus. Check it out. You're going to love it as John walks us across the world. And you dig into the markets. The software, folks, is going to do the work for you digging into those markets. And these markets here, you know, it's cool, as you said at the beginning of this conversation, John, is that the relative strength and our relative weakness is glaring now, folks, because anything that's strong in this market, and there's not a lot of them, but that is strong like a bull.
Yeah. You know what's awesome is here's a picture of crude oil, and
yes.
you know, we talked about this 32.73 being a big number. It's got to get above, and we, you know, this morning we're like, we're still within a long-term profile, and this is our daily. But you know, every time this thing rallies, we've been looking at some energy stocks and going into the XLE, and the scanners has been putting some insane cool picks on the board here.
They
RRC,
have. I've got a few of them.
Yeah, RIC, SE, that one you were talking about the other day.
COG, SWN, exactly. Yep.
And you know what? Every time oil even shows a hint of trying to go up, these things just move.
They do.
And it's just been awesome. I mean, you know, so like you know, and a lot of these, you know, you go into the that SWN, that little stock, really cheap little thing that's gotten beaten to crap, but won't go any lower when oil goes lower.
Right.
And you got the inflection points, the fences to lean against with this thing. SE, some really cool moves lately, as you can see, looking at these profiles, just kind of edging up, higher lows, crude oil made lower lows. And anytime, you know, crude oil starts making some hints of breaking out of this. And if you look at this, breaking out above this 32.73, if we get a crude oil close above 32.73, which may happen, it may not, but if it happens, I'm telling you, some of these oil stocks that have been showing like I don't want to go any lower, they're going to pop like 25%.
Right. Now, it would make sense because they're at small numbers now. They've come down dramatically. And, inside the commodity business, that's how small, well, even large commodity stocks like coming off the bottom because it's that cut and dried. The price that they're selling in oil in this case goes up. Guess what? It comes to the bottom line immediately. Yeah.
Yep. Margins go
what? I've been trading oil, John, the last few days, and I've been trading it off those ranges. I love those ranges, man. That's a monster range, folks. $2.50 in oil is like huge.
Wow.
It was funny. This morning I sold the first pop. I didn't get the second. And I was saying to Tom, I don't believe I didn't, and he said, listen, man, he knows another trade. And I said, no, there is. So it's really funny how the day ended, because I had a break for a while. So it was good, because what happens, folks, is that when you trade in a range, you like it to go back to the range. And I knew full well, looking at the bars in the scanner, that if it breaks, man, this thing really can break. You know what I mean? And it broke. And it went to 84 today, and that's the top is at 73, and I just couldn't handle it and that's because it started at too low of a level. If we start, folks, at like a 3170, 3180, and we start going for that level, different ball game, more energy. Yeah,
Well, the next stop up, if we start breaking 32.73, it literally could be 37.62. I mean, that's actually not even getting close to a long-term technical change. That's just kind of doing a retracement in a bear rally. So,
yes,
37.62 would be next stop up.
How cool is that, right? That's huge, man.
Very
huge.
Cool.
Listen, man, thank you so much. Really appreciate it. Look forward to the show tomorrow morning.
Aye, aye, Captain.
Okay, man. Have a great one. Have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Everything you need, folks, right inside you. Have a great one. Have a safe one. Tomorrow morning, check it out right here. Wow! Go get them, folks.